Welcome everyone to the reboot restart of Top Agent Nation Commercial Wednesdays. Leadership and everyone at Top Agent Nations wants to add more value to everyone. So as you're going to see, we're going to add different ways of sharing what we're going to be doing, especially with education. We probably will do for the first 30 minutes. We will add on specialties, whether it is AI, whether it is some type of new building material concepts like the capital markets. This is one of the big pieces within commercial real estate. And this is a great topic to get everything started because you got to follow the money. Money moves everything, like it or not. Ratios have to work. And as we start educating agents about commercial real estate, and it's always good to have a refresher, having specialty speakers, but so what? We're working on how to plug in using technology so everyone now can plug into the technology and send referrals, leads. I would say mostly from the residential to commercial, but there are, people forget, a ton of commercial leads that can go to the residential, especially with commercial. We do many development projects, and what residential would not want a huge portfolio of residential deals? And especially with Alan Wu here too, he does, consumer lending, SBA lending. Right now, it's the silver tsunami. This is the largest transfer of wealth. Many people transfer commercial real estate or real estate, but I'll tell you, most businesses you got to run. It's not turnkey. And if you let somebody else run the business without the owner watching, it never works out well. And I know other people here, like Scott, running property management. An absentee owner, as we all know, we call him that, never runs their property well. So, it is good to learn from the best. And I always say with the largest topics, capital markets is something that's really, really unique. Everyone talks about it, throws it around. Most people do not know what the hell does that really mean. So I have two experts on this call right now, Steve Atherton, Alan Wu. Thank you again for being on the call and introduce yourself. But we're going to go kind of into what is capital markets, how is capital markets, how do you use capital markets? As we all know, everyone usually runs the debt. Debt is easy if the equity makes sense or other things make sense. So I will first let Steve, if you don't mind, introducing yourself and sharing your background with everyone, especially in the world of finance and capital markets.
Thanks. Thanks, Jim. Yeah, good morning, everyone. Pleasure to be here. Good to see all of you. Look forward to meeting in person one of these fine days. But I guess just for a quick background, I've been in commercial real estate since 1983, right out of school at UCLA, and did traditional brokerage route. Worked for Grubb and Ellis, worked for a big developer, built some homes, had some home building background. Went to Asia when I was 35, and spent 30 or so years in Asia doing commercial real estate brokerage, either as a transactor on large scale, like corporate real estate and tenant representation. Have that background with Coronet Global, Master of Corporate Real Estate, and all of those exercises of courting corporate clients, getting exclusive mandates for regions or countries, and running transactions and facilities and different segments. And then I ran NAI Global for Asia for 12 years under Jeff Finn. And we built through a big network of commercial operators, partners across 14 countries, about 45 offices. And I had more of a management leadership role of helping offices develop their niche where they were the best and could carve out a space and make strong revenue and income and be a market leader. So we did a lot of that scoping out of SWOT, strengths and weaknesses, and how we could compete better. So I've got that kind of background, and spent the last 11 years in Indonesia running capital markets and investment services for Colliers, and did a lot with private equity funds, family office, high net worth individual, some sovereign funds, just your general real estate funds, developers, independent hotel owner operators. We covered all asset classes. So Indonesia was a really interesting place for us because it's the fourth largest country in the world, and a lot of investors and developers want a little slice of a growing kind of developing market. So any kind of capital player that wanted to come in, whether on the investment or the development side for Indonesia, would come in through Jakarta, Indonesia, which is a city of like 30 million or so people, second largest urban population in the world. And we had a large shop. We had about 350 staff, and the capital markets team was about 10 to 15 people with a valuer, financial analysts, research and transaction folks. So anybody that really wanted to do something in Indonesia would normally stop by our shop, and we'd sit in the conference room, do the dog and pony show, and hear what they were looking for, what their thoughts were, how they succeeded in their investment strategies in other countries, and what they wanted to get done in Indonesia. And we did a lot of listening and learning, and then prioritizing who we thought we were compatible to, really have a good business together and successful outcomes and make money. So that's a little background. We called our group Capital Markets and Investment Services. There's a lot of sort of gray area. What does capital markets really mean? And it means, I think, different things to different people. For us, it was more equity, the equity side of deals. We had a lot of clients in Indonesia that were landowners. We always called them land rich but cash poor. They had the land. They might have had the idea, but they didn't have the capital or the ability to execute. So they needed partners. So our primary work in Indonesia for most of that 11 years was, first of all, figuring out who we wanted to work with, because everybody would like help, but we have to know whether you have the network, the access, the resources to do it and make money together. But mostly it's compatibility with these partnerships of, who were compatible with each other for like corporate culture and the like. Some companies just wouldn't line up with a Japanese partnership. Others were more suitable for Korean or Chinese or Middle East. We have a 85% Muslim population in Indonesia. So there's a lot of cultural factors in looking at partnership things. But at the end of the day, it was really about providing the lion's share of capital to fund new development projects, and that equity capital would give us the ability to go to banks and different lenders and get the funding we needed to construct. And then there's a lot of different myriad issues in Indonesia where you can pre-sell. Projects, right? So a lot of developers will, get project approval from the government authorities, and before there's a shovel in the ground, they're out selling, and you might sell 30-50% of your project before construction, and you no longer need a construction loan. You've got your equity.
Steve, and that's the crazy thing, where different countries, different parts of the world operate differently. And, we'll get in more in the weeds, but see, that is the nuances where Steve actually works globally, internationally, most of his business, especially in Asia, and money's really moving around. And I know, Alan, you really work domestic, a lot of deals, and mostly on the debt side, but you do the mezz and some of the equity. If you don't mind sharing what Sequoia Solutions actually working on as you pivot and adjust in your background. And then we'll go deep into, as Steve says, what is capital markets? Everyone uses it, and we know, but a lot of times they're kind of there, but not really there. So we're going to kind of go deep into what it is, and then really how everyone can use it, and really the pitfalls and the advantages, and really the connections. As everyone knows, it's like commercial, very private, very in a black box. No one knows all the toys that everyone has, but you need to be part of the network. Alan?
Thanks, James. Well, good to meet everybody right here. Again, my name is Alan Wu. I run a company called Sequoia Enterprise Solution. A little bit by my background. I was actually serving the Navy back then and was floating on the ship and asked myself, what am I going to do when I grow up? That was all the way back in 2003. Somehow, somewhat, the word mortgage sounds pretty sexy. So, for no reason, I came back and set up my first company called We Have Loans for You. That is back in 2004. Did a lot of primary fundings, and if you recall those days, there's no licensing needed, no regulation whatsoever. You get up in the morning, you want to become a loan officer or broker, and you can become one. So that's what happened to me, and running that business in 2008 hits. Obviously, we all know what happened. I turned my company from doing mortgages and turned them into doing a lot of short sales. We end up negotiating more than 4,000 short sales from 2008 to 2013. So when the time came and it was time for me to retire from the Navy and also again ask myself what I'm going to do when I grow up. So I still like the funding area, but don't like the mortgage anymore. 2014 versus 2008, the mortgage industry is totally different. So that's the time that I decided to get into commercial funding. Start out with just funding non-QM type of loans, then got into fix and flips, constructions, developments, then moving into apartment buildings and so on and so forth. So the biggest deal that we ever funded is actually a hotel in New York. It's a $75 million hotel deal in New York that is a few years ago. But from anywhere from $100,000 fix and flip all the way up to tens of millions of dollars. So in our shop right now, we're averaging funding somewhere around 70 to $100 million a year. Currently, we're working with over 500 different funding sources. They're all debt. They're not equity. So I'm a debt guy, and I've been talking to James for a long time. Where a lot of my projects, finding the debt, just like you said, is not the difficult, but it's the hard part to looking for the mezzanine loan and also for the equity, the equity to come into the project. We also do a lot of non-real estate type of funding for businesses such as working capital, equipment loan, SBA loans, business acquisitions, buyout, partner buyout, so on and so forth. So again, in a nutshell, that's what we do. So pretty much we are a broker, we are not a lender ourselves. So pretty much anything that in the lending space, especially here in the United States, as long as the project makes sense, the principle makes sense, most likely we can find some sort of funding source for them. Know James for 2 or 3 years already, and our business model is actually very similar to EXP. Probably you guys are all with EXP. So we have a group of agents that sign up onto our platform. Most of these agents are real estate agents, loan officers, insurance agents, CPAs, and they already have a book of business. And however, little they know that most of their clients are already business owners, and it's not a matter of if they need funding or not. It's a matter of when do they need money. But quite frankly, a lot of these professionals just don't know where to go for commercial funding. Just like James said, this is a black box. It's a very, very private industry. And to my own word, it's the last disrupted industry in the country right now. So everybody know what commercial lending is, but not many people knows what commercial lending is or where to find this funding, where to find money is like this. So again, that's what we see, and especially in today's market, we see something that's very, very interesting. As a matter of fact, out on the market right now, there's so much money. A lot of money are coming into United States right now, whether from Asia, from the Middle East. On a daily basis, we have lender contacting us. Hey, what can I do? I mean, I have $1 trillion. I have so much money. So Alan, can you help me out to deploy it? So that's what I see on one side. And quite frankly, all this money, they are old money. They're old money. They're not like a bank where they can have marketing teams to go out there to market their products. But yet, on the other hand, we also see a lot of projects that are struggling to looking for funding. Quite frankly, a lot of these projects come out, the number one thing that they will go into, it's a local bank. And we all know you go into the bank 9 out of the 10 times, you walk out empty handed. But then they stuck. So we see a lot of good projects. We see a lot of old monies, but there's no connection between these two industry. And that's where Sequoia comes in, and with over hundreds of local agents that bring in the deals to us. So again, just like Steven said, we are also a connector. We connect the right product, the right project with the right lender. So that's what we do. So love to do business with this group right here, and anything that I can do, feel free to give me a call. Love to see more projects from you guys.
Yeah, Alan, if you don't mind sharing your information, and also Steve, and this is the thing, everyone does something different. They do it somewhere else. Most people don't even know, even in the industry, where to go. When I was at Marcus, everyone just says, well, I don't know, until you meet people at cocktail parties or getting in the industry longer. We had Capital Corp, but they were just a debt shop, right? And what type of debt shop? Sometimes they have a limited amount of debt of providers, or they're getting more, as Steve knows, it will go into it, yields, fees, all these rebates, they make some more money, right? So having everyone learn what this is, how this is, but what we are going to do at Renaissance Global, which is Renaissance Capital, we're going to set up, is a bunch of different lenders, equity, let's say capital markets, but all sorts that we trust to put down the capital from the equity side, whether it's a broker dealer, family office, um, private equity groups, right? They're all different. And Steve can probably talk about Taiwan, Japan, sovereign, actually countries doing an arbitrage on their interest rates, right? And that's something that, right, is beyond, it's like a PhD level. Everyone likes to discuss, and someone, the yen unraveling, right? The yen trade, right, going away and changing, because you don't want to be on the wrong side of the trade with leverage. But these are the interesting things that everyone in commercial should know, or at least have multiple sources to run your debt. And I said, this is the cheat code of doing analysis on your property. You don't have to analyze everything. Let the lender analyze it for you. They'll tell you if the ratios are off and why, because they want to win the loan. They want to get it. They'll tell you if it works or not. If they're starting to give you, or when the market was crazy, they were giving us back in the day before the crash happened, 90% ratios were really crazy. They did things on performa, and we will start going into the weeds of understanding how to do this analysis. What are the ratios? What is LTV? What is debt coverage, right? How to balance it out? How do you run all of these things? But Renaissance, if people are interested, will start going into courses and teaching. And we are going to build a capital markets finance group. So at the worst, you get to run your numbers. And if the numbers check out compared to who you're using, you could use our source. And our source is a collective of friends all around the world that can match your deals up. And that's what we're doing. Because any one person only has a limited amount of resources, or they're charging you too much like a broker dealer. But Steve, if you don't mind sharing your opinion, being around so long, running big deals, what is capital markets to you? What would you say capital markets is?
You know, Jim, that's a good question. From my experience, capital markets, covers it's broad, of course, but for my experience, I've been mostly immersed on the development side of the business. So it's creating the new projects where it's not an operating asset so much, because a market like Indonesia, there's a lot of transparency issues where you can't get rent rolls, you can't get all the details. There's a lot of trust issues that you have to work through. So like being able to use a very robust software system like Argus software or whatever that most of your private equity and your larger investors have traditionally used. You don't even have the information to fill in there. So you're doing more of detailed spreadsheet financial modeling analysis of what you see as a feasible project that has market research behind it, where you understand the dynamics of supply and demand, and you're able to give an investor a very informed view on why this project is feasible and how this project makes money. We're not just like a waiter, bringing the food out to the person in the chair. We have to give them the reason for the investment. What and how do you make money? Why is this partner suitable as a party that you can trust to execute? And then Why is it? Why is a high-rise apartment building or a shopping mall or a hotel or office a suitable development here? And how do we back that up with numbers and research on rental rates and ultimately, backed up with construction costs and looking at NOI and cap rates and ultimately, holding periods and how everybody's going to achieve their IR and working with investors and the developers on reasonable, um, you know, um, uh, sharing of revenues, all the different ways of distributing the profits, the rainfall, all the different uh, distribution methods. That's probably what we spent most of our time on, Jim, is more on the development side. Of course, you've got the whole institutional capital market side for debt, and we didn't deal as much on the debt side because we really filled a niche for equity capital and being that juice that would make the deal happen.
Thank you, Steve. And maybe Alan, you want to add, because I know regardless, you specialize on the debt side or the consumer, especially with owner occupied, but you've come across, and I've known that's how we first met with one of our mutual friends in the Bay Area. You are trying to put together the capital stack and everything together. So if you will kind of give your idea, and then I'll give my kind of simple opinion also. But if you don't mind sharing, because I know you run across this all the time.
Yes, for on our end, well, if you're talking about smaller project like purchasing 1 to 4 unit, that it's pretty straightforward. You know, you really don't need the capital stack for it. We can fund up to 80%. So normally the client will put down 20%. Now, it just remember in commercial lending, the lender would like to see skin in the game. So that there's no such thing as 100%. Officially, there's no such thing as 100% finance, but even though we might be able to structure it using many different ways, but however, when you come into a little bit bigger projects, especially in the tens of millions of dollars construction projects or multi-families that in the tens of millions, most of the lender will only feel comfortable to fund between anywhere between 60 to 70%. I mean, 70% is already pushing it. Again, somewhere around there. But the client need to come in with some sort of equity. That is where the equity raise comes in. Again, the number one thing before any lender will jump into a big project like this, they will ask, "Hey, how is this guy? What is the liquidity?" If you're talking about, let's say, just a $10 million project, and if the guy is only has like a few $100,000 in his bank account, is not going to work. So in that case, we need to help the clients to look for that capital stack or look for that capital as an equity. So normally we're talking about 30, 35, 40% equity into that deal, depending on the risk. And before the lender even becomes serious to look into a deal like this. So that is where we see I mean that's where we see a lot of the challenge is on the market right now. It's the looking for the capital. A lot of these people, just like Steven said, they're property rich, but they are liquidity poor. And many of these clients that came to us, yes, indeed, they have so much property, but again, they're not liquid. So that is definitely a challenge out there, and that it's if whoever that can tap into the equity piece, that will solve a huge problem.
Thank you, Alan. And in a nutshell, my simple idea of capital markets is there's an equity part. There's a
Yep.
middle part, which is usually called a mezz, right? And then there's a debt part. But this is the issue too. There's a cost of capital. There's a cost of the equity part, whether unless you bring up your own money, but then there's opportunity cost. There's the middle piece, which is usually short term. And there's the debt, which is usually the longest term you could possibly get. And yes, Alan said there's no 100% unless you have a lot of collateral equity and the bank is your best friend, or you have, $100 million in Merrill Lynch. They're going to lend you the money because you have collateral, right? So, but as you can tell, equity plays. So anytime you're learning about this, the top of the stack is the one that runs the show. And not everyone plays nice once you run the equity stack, right? Everyone hears GP, LP, right? Those are different positions of, and Steve could probably run the deal, or so can Alan, because when you put money together, the other secret is just finding the deal. Find the good deal, underwrite it right, put the money together, boom. And then, like with Scott Cook, operate the deal. You operate the deal, manage it the best you can, increase cash flow, reduce expenses so you can sell it, flip it, refi it to something else. But this is the simple thing that everyone has to understand. That's what we're going to do, building a Renaissance Capital, which is an open market platform that we're going to share from the equity part. Some of them are broker dealers, some are family offices, some are fund to funds, right? Everyone's looking for a return. And everyone has to understand there's a cost of capital. Cost of capital is the points everyone charges. And then there's the terms. We don't let you put a second behind us. We don't let you leverage it. We don't let you do this, right? Those are terms. So everyone has to understand the pricing, cost of capital, terms. Everyone just thinks, oh, it's the simple numbers. It is not the simple numbers. Look at the terms. And I know Steve and Alan would understand. You got to look at the terms. It can sound great on paper, but the terms are horrible because it's like, oh my gosh, you know what? I'm not going to stabilize my project. And oh my gosh, if I don't, it jumps like maybe 25% more or 50%, or sorry, we're only doing very short term, maybe less than 2 years, 1 year. You never know, right? And a lot of them, when they know you're desperate, they're gonna, take advantage of you because they can. And that's what everyone has to understand. When we talk about capital stack, you're talking from equity, mezz, the middle, and then the debt. And everyone should have an understanding. That's why Renaissance Capital, we're going to work with many different groups and technology so you can run an analysis. Everyone can bid on it. And they're bidding on it from the entire stack, cost of capital, right? Because everyone's going to charge free fees. And even the agent that has a direct lender or a direct a direct like family office, sovereign wealth, private equity, they want something. But sometimes agents need a price in, and sometimes there's opportunities for everyone else. The debt is easy. Once you get the ratios and the numbers to work, debt is easy. So a lot of times we will work with debt brokers to do the mezz and the equity stack. And then that's what everyone has to understand, how this works. But it's not just here's the price, here's the term. It's a cost of capital, which is the points the agents charge, and then it's the terms. Because I'll tell you, usually if you run the equity, you dictate the mezz and the first trustee, the debt side, because they without the equity, you don't have anything. And some people I've noticed, once you have the equity right, everything else that is below it works. And they want to run that because it's free points. Let's say you're doing the debt side, you can get 1% or 50 basis point at least on the debt side. And usually that's the largest amount. It could be 50, 60, 70, maybe even 80, depending on how you stack it up. But the equity part, without that, the ratios don't work. And we will have equity classes to let everyone understand capital stack, ratios, using more sophisticated tools, because this is underwriting. And anyone that wants to work on projects, especially like Steve, if you're working on development, oh boy, you got a whole bunch. And if you're working blind without data or numbers, oh boy, you better have trust, friendships, and somebody you can reach out to in that country. Or just, I would say, as we all know, we've been burnt before, just don't touch the deal. Don't play something you shouldn't play or pass the buck and get a good, like I'm asking Steve right now in a multi-billion-dollar event, that get a good damn attorney in country that can go analyze and help them and make a little money, but you pass the buck to somebody that's going to protect you from liability. So this is the interesting part. And Steve and Alan, I'd love for you to share maybe a case study on this, and maybe Steve on the development, because everyone loves to, share these kind of good stories, maybe a good and bad story, if you don't mind sharing an Alan, because we all know, but maybe why a Renaissance Capital, every sophisticated, from the equity side, from the mezz and the debt side, we all are sharing our toys, especially with the friends and using technology, especially with AI now. You just put in the information, it could start matching up how the stack should look like. But Steve, you want to share maybe a good story and then a horror story, why you better hire or get somebody like you if they're playing in Malaysia or the Middle East or something. You better get some experts.
Yeah. Well, I'll give you one. When I first moved to Indonesia, back to Indonesia, I was there 2 times. In 2013, 14, we had the prime boutique, luxurious hotel development and luxury apartments in Jakarta called the Dharma Wangsa. And they had a plot of land next to them that they wanted to develop into more larger size luxury apartments and office tower. And they needed the capital. They needed the capital to do it. They had the land, but they didn't have the equity. So we did a large market study and figured out that Japanese capital at that time was going to be the right flavor of the day to get the job done. There was a lot of Korean and Chinese money floating around, but it was less dependable, less reliable. They would have the Koreans and the Chinese would have 2 or 3 different teams on the ground searching for deals that didn't communicate with each other, and it was a nightmare. But whereas the Japanese would be very structured, very organized, have robust business plans, know pretty much exactly what they're going after. So anyway, we did the whole complete package: market, supply, demand, financial models, all the construction costs, the revenues, the profitability. Ultimately, we had a competition between a couple of Japanese companies, Sumitomo Corporation and Tokyo Tatamono, 2 very reliable developer investor partners. We ran all the numbers. We got the meetings and the negotiations, and ultimately Tokyo Tatamono invested about $80 million into that project, and they now are the majority owner of that project. And I'm starting to, and the thing is that that one deal has led now to, I'm working, now that I'm back in the US, I'm working with Tokyo Tatamono and their team in El Segundo, California, for doing apartment recap deals and value added apartment deals and new development deals. And we're looking as well for student housing. And it's one of those things where you got to know your client. So Tokyo Tatamono will only do deals with medium to large, successful, proven entities. You could bring them the best deal in the world, in Nashville or Austin or whatever. But if it's like a developer that has never done it before, even though the numbers are like amazing and you can just see how profitable the deal is, if the developer partner doesn't have the right background, it's not going to work. You can't force a round peg into a square, So knowing your client, knowing what they have the capacity to do, what they have the appetite to do, not trying to convince them that you're smarter and you've got a better plan, but helping them do what they want to do.
Steve, and I think that's the greatest thing, the long-term relationship, especially on the equity side, right? Oh boy, does that matter, because you've been working with clients for multi-decades, and that is important. So if you're interested also, reach out to Steve. But in Japan, he has very good clients. I know Asuko's here with great connections. And this is why we have to work together. And in Top Agent Nation Commercial, we're going to start building a community so people can share ideas, work on deals, right? Collaborate. And that's how you get the best things done. Because Alan, a lot of times when you see these deals, I mean, we won't name names, but remember with one of our friends' project, it was tough, right? I mean, if you want to share what you had to go through, and I think you did produce a term sheet, but it wasn't what the individual or the group wanted, if you don't mind sharing.
I'm not quite sure which deal you mentioned, but again,
The San Jose deal.
oh, the San Jose deal. Okay. So again, that deal was a few years ago. It's a hotel construction. So the gentleman has the experience to do the hotel, but however, well, we did provide a term sheet first of all, but however, within his group, he has other he has total four investors that make up the debt, make up the equity. So it was all nice and fine. If everything in a perfect world, we could have funded that deal and the building is up and running right now. But you know, things always happen. Last minute, one of his partner chicken out of the deal. So now all of a sudden, a big piece of the equity is gone, and without that big that piece of equity, it's obviously the deal is not going to move forward. So that it shows that how important it is when we have a, a deal like this, and also you have partner like this. The commitment of the partners are very, very important. Many of those partners they come in so-called partners, and obviously partner they are not actually putting in the money yet until they pull the trigger, right? So by the time when everybody needs to pull the trigger, and if you don't have a committed partner, then the whole deal falls apart. And as a matter of fact, and that's what happened with that one of the big investor, he committed to, I think at least like 10% of the equity, and he decided to pull out, and the whole deal falls apart. So and even up to today, well, actually, in a good sense, is that we are kind of lucky not to fund him because that was before COVID, and if we have funded him, and that could have been a very disastrous experience for him. So again, I would see that things happen for a purpose, the way that I see it. And I'm actually working for another deal right now. It's also another hotel construction in San Antonio. The client is a very experienced hotel operator. He already owns four hotels in the area. So we've experienced there's no problem. He owns a few jewelry shops, so he's very wealthy. But however, as a businessman, he does not have the funding to sit to laying around. So this deal already approved by SBA, by two SBA lenders, but both of the SBA lender require him to not only to inject the 10% into the deal, but also they want another 10% sitting in a bank account that just as collateral, just not doing anything. And as a business owner, he cannot have millions of dollars just sitting somewhere and not doing anything. So now we're still looking for, we already have lenders that's willing to do it on the debt side, but we need to look for partners that can come in on the equity side to make this deal work. So again,
Maybe
you
you
can
talk,
see,
maybe you talk to Steve right now and others. Steve, this is the thing is putting the
right,
pieces, and it is this, as Steve mentioned, and many people trust, friendship,
right, right.
being a straight shooter, right, Steve? You'd rather know from Alan who this person is without direct. Maybe you have to sign an NDACA, you introduce, but at least you get the gist of it. Are they experienced? How is this their first rodeo? Maybe have they gone through something horrible? How did they handle it? Right. And maybe you get people comfortable to do this. Would you be correct that working with a group of trusted people, everyone knows each other, even on the agent side, right? And everyone's kind of bringing their toys together.
Absolutely. And also, you know, Alan, you've probably seen this before. An owner operator, maybe, you know, they have a skill set that is attractive for an investor to own some of the company too. Because like I've
Yep.
got Asian developers that own hotels. I mean, they just love hotels. It's, you
Yep.
know, it's the social bragging rights, right? The hotel asset class is that one product that, you know, rich people love to own.
Yep.
And so
Absolutely.
I've got Asian investors that want to buy, you know, some shares in U.S. owner operator hotel players that could expand and maybe start to build a business in Southeast Asia. So, you know, if you got the right personality type and corporate profile, that could be a matchup.
Yep.
Hey, Steve,
Absolutely.
one thing is if you're in Beverly Hills, I'll be there next week. They're all private equity family offices out of Beverly Hills, and some of them are multinational groups. So I'll send you the information if you're free on Thursday. So we're going to
Okay.
be at CCIM. Well, Scott is going to be there too, and we'll share with our team. But this is where and what we're building because I need, you know, Scott. We've always talked about property asset management. If it's a large deal after it's developed, they want professional management groups, AMOs, IRM certified CPMs, right? Whatever it is, they have to feel comfortable that the property, when they're that big, is managed correctly. Or, like you said, with the hotel, it's run by a well-known flag I know a lot of Indians are building their own now. They used to be in the low cost, very cheap. Oh boy, they're moving up now. They're not doing that stuff anymore. So, but this is why everyone needs to talk and share, from so experienced internationally, globally to locally, right? And also new agents that want to learn this. But with the technology and AI, that's the thing. With this group of friends, we're all working, Steve, Alan, many people here or listening as an audience member, we're all putting things together because we trust each other. Many friends have been around for decades with each other. And I'll just tell you, they're not going to ruin their reputation for a couple bucks, right? Unless, Steve, they're done with the deal. They make so much money they can run away and hide and never show their face again. But you don't want to be that character, right? It's not worth it. And that's why we're bringing in a lot of friends. Steve, you were going to say something, or Alan? Go ahead, Steve.
I'm good. Go ahead, Alan.
Oh no, what I'm saying is that's absolutely true in our line of business, because when client come to us, they always shopping around, right? So basically I tell them that, hey, it is very important. I mean, anybody can give you a rate, but normally what I tell the clients things that I can tell you something that you like to hear, and I can tell you something that you need to hear. What would you like to hear? So obviously, if something that you like to hear, I can tell you your rate is 3%, 4%. Doesn't matter. I hold no weight to what I tell you until, once we start the underwriting, then I have thousands of reasons. I come back to you saying, oh, I cannot get you 3%. I can give you this. Because that's what happened to a lot of lenders out there. Just like James, what you say, there's a lot of lenders that are out there, they don't have the intention to lend to grow, meaning that they help you to give you the funding to see you grow. There's a lot of lender out there is called lend to foreclose, meaning that they have the intention to lend you the money, but to foreclose your property. I mean, I can go into
Yeah.
detail all day long. So I've been now, Stephen, you know what I'm talking about, right?
Lend to own.
Lend
Yeah.
to own, absolutely.
Yeah.
Lend to own,
Yeah.
right? So again, I tell my client, hey, it's very important for you to develop a relationship with either a broker or a lender, not just looking at the rate. And that is what happened to a lot of real estate agents also, because when they help their clients to purchase an investment property, whatever that might be, all they can think of it, hey, give me the lowest rate, give me the lowest rate. That is not necessarily the best term for you. And again, and as a broker, or perhaps Stephen, you can add into, we vetted a lot of lenders. We know which lender can do what and what it can actually deliver, and that is the relationship is already established. And on our platform, the reason that we want to be like just like EXP is because we don't also want to just go out to look for any client out there. And quite frankly, there are a lot of client out there, it's a shopping around, and they are not real client and end up wasting a lot of your time. And that's why we specifically work with company like EXP, Keller Williams. The agent already have the relationship with the client, and we have the relationship with the lender. And now when you combine together like this group right here, the success rate is much, much higher than if you were just out there looking for funding sources or clients on your own. So that is just my take on this.
Thank you. And we'll probably do an underwriting course, from very basic to very advanced, because it is interesting for those that are going through we always say the real estate journey, right? And most people, you become a broker, you make some equity, you understand it, build some clients that will invest with you. Then you take usually two routes that I've seen. You usually become a syndicator, or usually you become a developer. And from there, and don't leave you out, Scott, they also have property manager, third party. But, this is really the curriculum of how it grows. And we know they stop being a broker because they're making more money finding deals, putting deals together, whether they're syndicating or developing. They got to get it managed. And they grow into these massive Titanic groups. And I've watched over 20 years plus how everyone's just been growing their wealth doing this, but not over leveraging. Like Alan said, sometimes COVID, oh my gosh, the Great Recession. Great Recession, I was the rent to own too. I was interest only on the second trust deed, below interest rate cost. And then I jacked them up in 2 years, thinking that something bad would happen and I'd get the property back. Who knew in the Great Recession it went below 50% LTV? It just blew past my second trust deed. I got a call saying, you want to cure this loan? It's about $250,000. I'm like, that's okay. Take the property back. But you got to understand this. And there is Steve and everyone here may know, too big to fail. Sometimes small deals, banks will take it back because they can flip it, they can sell it to somebody instant. When it's, right, Steve, $500 million, $1 billion, it's not your problem anymore. It's the bank's problem because they can't run it, manage it, deal with it, especially if it's a development project. They are in big trouble that they have to work it out, restructure the deal, and get it to completion. And that's the thing where if you think you're going to play games with the banks and it's a smaller deal, they're just going to take it. But if they're in the billions, hundreds of millions or billions, they're going to work it out with you because they have to. It's just too hard to get somebody else in unless in the beginning they underwrite. They knew a worst case scenario, they have somebody to step in, right, and finish the deal. And Steve, you want to talk about some of the large deals and what you've seen, and I'll get Alan to talk about maybe the 10 million and under, so we can kind of share a difference of mentality of the let's say different groups you deal with.
Yeah. Well, just in general, Jim, the private equity, the family office, the sovereign funds, typically we're looking at equity checks in the 20 million to 50 million range. So they want to do large. They don't have large teams. So, the effort that they're going to put into a smaller deal would not be that much different than a larger deal. So they want to have scalability and get their capital in the right size of projects. So, a lot of the projects that we would look at and underwrite would be 20 to $50 million checks. And then, when you get into more high net worth individuals and some of the smaller family offices or developers, we would normally work in maybe say the 5 to 20 million equity check range. So that would be pretty normal, Jim. I would say as a profile for amount of equity, type of player. Right now with the Japanese that we're dealing with here in the U.S., it's about 20 to 40 million check size that they're looking for. And they're looking to do apartment deals or home builder, development deals, LP, in some cases, GP investments where they can ultimately say over a 3 to 5 year period, buy 100% of the shares of the company and own development businesses. So I think
we may talk too, because a tech company, like I was telling on our call, they'll probably be on our Friday call. They won 3 major home builders. We are putting a group together, and this is a side deal on putting all the criterias for the top 100 in the U.S. home builders and their criterias to build. Steve, this is a place to, hey, I want to do LP money. Here's the criteria. We put the stack together, pricing ourselves for a little bit, right? Don't blow the deal. And there's such opportunities, but this is where collaborating, communicating, talking, and everyone working together, but using tech to help match up deals. But Steve, I got something for you. As everyone should have, I would say, at least 3 unique conversations a day. And the more you talk to people and the higher they are, it works. That's what you got to do. And then when you talk to other leaders, like on this call, and you share deals, like I just had a call, huge Korean company, they want to put some big dollars together too. And I mean, but every one of us can't project manage everything, but collectively, with everyone's strength, we can get a balance sheet, we can get a track record group. It's just finding the right groups that don't take everything out of the deal so everyone can get paid, right? And that's the thing. And one, is it a deal first? And that's where the individual that hears the deal should underwrite and understand. Is it a deal? Okay, let's put it all together. Alan, do you want to talk on maybe the 10 and unders? Because I know you flip those like crazy.
Yeah, that's actually our sweet spot, somewhere between 1 million to $10 million, somewhere around there. We see a lot of bridge loan these days. Many of those deals they refinance a few years ago, get a bridge loan, and now it's come to due. So we have a lot of clients that are coming to for refinance. And also we see a lot of purchase these days because of the economy. I think a lot of the businesses that they used to rent places, and now is a good time to buy because the real estate actually in the commercial side, it's had a huge discount, especially in a certain type of asset class such as commercial condos or office space and things like this. I seen buildings that used to be worth about $2 or $3 million, and now they're selling at $900 million. I got a restaurant owner right here that they already running a business in that building, and according to him, the building worth about 1.2, 1.3 million, and she's picking it up for $680,000. So again, it just, but we're seeing a lot of purchase out there. So again, that's what we're seeing on the market. So
Thank you. And then this is the thing, Steve. I was just looking to introduce you to Beverly Hills because all of us that know each other, friends with each other, talking about deals, we can start matching it up, and we can even learn from the smaller deals to put some groups together. I mean, we have Todd Billings. He used to do, wealth management. He has over $1 billion under management now doing projects. I mean, this group, and we want to build a community at Top Agent Nation for everyone to plug in to learn so you can earn and build these relationships. And in many, you see, we all have kind of gray hair or no hair or yeah, something going on that this is the group. And I would just say with AI and automation is you got to use it, you got to build your brand, but you got to find the right people. As everyone says in real estate, especially commercial, it's still a relationship business. AI is not going to easily, right, Steve? These Japanese are not going to say, oh yeah, AI. And they're probably one of the leading industries, right, in Japan, a tech, right? They're tech
Yep.
giants. They're not going to just, okay, I'm going to trust the tech. I'm going to trust Steve, who I've known for 35, 40 years and did many deals together. That's what's so important. So final words from maybe Alan and then Steve, and then we'll close up. Alan, any final words about capital markets or finance that you would share with anyone?
well, again, though, how I see it is that there's a lot of money out there, that's for sure, and there's a lot of good project out there, that's for sure. Just need to connect the two of them together, and each one of us, we already in a business that's servicing our client. Again, it's a huge opportunity for, oh, especially the bank is not lending. We see a lot of clients come to us for alternative funding. Used to be that they able to go down to the local bank and they would just got a $2 million check, $5 million check, and now those days are gone. And we see a lot of them are coming to us for alternative funding. So definitely, it's a good business for us to be in for the next few years.
Thank you, Alan. Steve?
I would just close by saying, Renaissance Global is doing something that I think is very exciting and interesting because it offers something for everybody. And that's what's unique about it, because like there's older guys, like I'm 65, right? And I left the big companies and I'm independent. And all I've got is relationships and the network, and my name, my own brand, right? But I can leverage that with Renaissance Global and be something bigger and reach more clients and projects and opportunities. I've already got a solid brand, but I'm not that great on social media and that kind of branding. So Renaissance Global can make me better, more visible in doing my business. And so a lot of us older guys, I think, already have the trust in the clients and the expertise. We don't need to be with CBRE or JLL or Colliers to get a client. They already trust us. So if we can analyze a deal, underwrite a deal, and put the right parties together, we can make big business happen, right? And then for the younger guys, hey, you got the old dogs sitting around the table that can partner together and jointly work on projects and help determine whether it's even worth spending time on or just move on and spend your time on better opportunities.
Thank you, Steve. And that's why we built Renaissance as a team with many past leaders, presidents, trade presidents all around. Everyone's known each other for decades. And doing this because we're bringing down the cost of transaction and the friction. So now, because of trust and relationship and not the 50-50 houses or a black box, they're taking all the money, there's nothing for you to work on. Technology and everything we're building, it allows you to collaborate, cooperate at a fair price to get listings and deals, or bring them in-house to be underwritten and understood so you're in the deal, because by yourself, you probably won't get it. It's still very hard, but working together, sharing all the best tools of people because we don't have those huge overhead. Now we can all put things together. So I encourage everyone to join Top Agent Nation every Wednesday. But also, if you're interested, join the Renaissance group. It's open for everyone to listen, learn. We hope now, as the new program are going to start, for those new agents to teach you underwriting, what Steve and Alan said. How do you go underwrite? How do you do simple debt service? What does that mean? To brokerage deals, to lease deals, to business brokerage deals. Then we will go into what I usually see, or friends of ours. What is the new hot topic? What is the new trend? What is everyone working on? That gets you ahead of the game, right? Competitive advantage. And then using the technology to build communities, share resources. So whether you're independent, franchise, some type of corporate or large institutional, multinational, publicly traded corporate like JLL, CBRE, Colliers, right? Those big ones. How do you work together? Because sometimes I'll tell you, you may have the connections, but you're going to have to work with CBE or JLL. That's okay. But they'll still pay you because you're going to get a deal, right? But this is where the group brings in all the friends so you can get priced in. Everyone, thank you for staying and listening for Top Agent Nation Commercial Wednesdays. You're going to see a new program of how we're going to work and a lot of community to help everyone make some money in this definitely changing market for everyone. So everyone, have a great day. See everyone next Wednesday. Bye-bye.